Hello, everybody. We're back. I'm Tom Sosnoff. Hello, Mr. Dylan Radigan. How are you?
I'm very good. I'm so happy. Can I tell you why I'm so happy today?
Yeah, I fire away. So I can't stop you.
One of the great sort of characters of the world is always whoever the world's richest man, I'll call it, right? Whether it's Bill Gates, is it Jeff Bezos, is it Bill Warren Buffett, is it Henri Arnault, the owner of Louis Vuitton? Is it Jack Ma? Is it Elon Musk? You know, all these. It's like movies. They're like a super villain, super characters.
Yeah, sure. Whoever it is, okay.
Whoever it changes by the day or the month or the year, or whatever. Sergey Brin, all those guys. And my favorite of all the world's richest men is Jack Ma. I think that the world's richest man should always be Jack Ma, no matter how much money Jack Ma has. I think that he plays the role of the world's richest man better than anybody I've ever seen. The rest of the world's richest men have many character flaws, very disappointing. Elon doesn't even take care of himself. He's getting fat. He's working all the time. He's not like that's not the world's richest man. Bezos works out too much. He's like, all he's doing is lifting weights, and he thinks now that he's got what, it's ridiculous. Like, what are you doing? You know, like Jack Ma is the world's richest man. Do you understand what I'm saying?
I'm okay with it. I don't understand what you're saying, but I'm okay with it so far. I'm following along. I'm playing along at home.
So anyway, I appreciate it. So I give you my little treatise because Jack Ma reemerged, much to my pleasure. This is why I'm in a good mood.
Okay.
And he came in and they said, you were, one of the world. I'm going to call him the world's richest man. Whatever. You can do call the accountants to argue later, but it's for my money. He's the world's richest.
Okay.
And they're like, we're going to break your you're done. We're going full Teddy Roosevelt. We're trust busted. The Chinese are going to trust bust your ass. And Alibaba goes away, and Alibaba becomes whatever it is, a bunch of different companies, payments, communications, shopping, whatever. And I believe this is a signal after 25 years of consolidation, going back to the late 90s with the bank M&A. And Alphabet and Meta and all these things, and Amazon being an incredible example, that we're going to start to see some trust busting across the board, whether it's by virtue of the DOJ, although I think it's actually more likely to be by virtue of Goldman Sachs and Morgan Stanley in a boardroom meeting. I guess what I'm getting at is regardless of the politics or the entertainment value of Jack Ma as a character, the decision to break up Alibaba, which I think will be seen as successful because a payment of each there'll be 6 companies and they'll all get bigger, will become a new way to release trapped value from Amazon, from Facebook, from in banking meetings, and will reverse what has been an incredible period of consolidation.
So just so I understand, by trust busting,
effect, I'm saying the spinning off of business divisions.
Got it. I just want to make sure that that's the same thing.
I use trust busting as an abstraction, but and I'm not saying the DOJ is going to do it per se. I'm saying it's a Morgan Stanley or a Goldman meeting that they're like, we can make this 6 times more valuable with video, with. So
the new SPAC is not SPAC, but the new
breakup.
The new split is the breakup.
Yeah, the new transaction du jour over the next couple years will be the breakup.
Well, you have to
WhatsApp, Instagram will pop off, all this stuff.
Okay, so you have to give Jack Ma credit then, because being first to the spinoff game is really cool. I guess so. I like that.
He's like the Beyonce of like business decisions.
Yeah.
He's an influencer.
Yeah. So that part of it's cool. I think it took these companies like Amazon so long to split that I think it will be a lot more challenging for them to break those companies apart. I also think that American CEOs, founder CEOs, have a very different mentality when it comes to what you can do in America versus what the Chinese government would allow Jack Ma to do. So basically, Jack Ma got shut down by the powers that be, and Jack Ma went to a behavioral. Went through a entire
behavior modification, I think we call it.
Yes, went through the entire process of behavior modification.
Or maybe I think they call it re-education. Actually.
Re-education, behavior modification, re-education. He had to learn what
maybe
it was.
Maybe we have to send Tony for re-education. You know, that's something to think about.
I've been thinking about that for 10 years. But I think that Jack Ma, through the behavior modification, realized that, listen, I mean, I have to play the game with the cards I was dealt. And I think in China, the cards you are dealt are very different than the cards in America. I'm not saying that every company, you know, is not looking at what Alibaba just did and saying to themselves, okay, well, 2 weeks ago, the stock was trading at $80 and now it's trading for $100. So, I mean, I can do that 20, 25%, you know, boost in equity because the sum of the pieces are worth more than the, you know, than the whole. And can
I interject a relevant thought? Sorry to interrupt you.
Sure.
So culturally, I'm just going to quickly agree with your point but I think there's another provocative factor for the American tech conglomerates specifically.
Yep.
The backlash on targeted advertising is here. And it really arrived last year when Facebook implemented, I think it's called iOS 14, where they really majorly impaired the ability to do hyper targeting for ad sales, which is the bread and butter of that business. And that's in direct reaction to try to avoid a breakup. That's like a way to defer the DOJ, right? The only reason they did the amendment to the iOS was because the DOJ was in their noodle about targeting and monopoly and advertising and all these things. And so they're like, listen, leave us alone, but we'll tweak the algo so it's not so hyper optimized them, so we're not such an unfair advantage. Well, the greatest value of integration of Instagram, WhatsApp, Facebook, having all these things in one roof is you get all the data from everything. So you're able to get the best data, so you get the best conversion. But if you're no longer going to market that as the core asset because of the backlash from the DOJ and because of the agreement to disconnect the data from the ad sales business to some degree or to adjust it back, I just think also supports, why not? Then the Instagram will be standalone. We can still have a JV, whatever, you know, like there's a data, you can do data sharing. I don't know. I think between Jack Ma and the decline in the value of the monopoly as an information stranglehold. I mean, all the ad dollars went to Google and Facebook from everything else, right? And that's now has been impaired because of the rules last year, and I believe it's the most directly threatened right now.
Okay, I'm not going to argue that at all. In fact, you know, I would probably even argue that TickTock had the greatest impact on the advertising revenue for these companies. But even so, it doesn't matter. I agree with you, and all that is changing. But I think you know, since you brought up Alibaba and since you brought up, you know, Jack Ma in China, I don't know. I think the brilliance of this move by Alibaba, and the only reason we can say it's brilliant is because the stock market has reacted in a way that shows it was a brilliant move, and that's how we measure everything: efficient market hypothesis, blah blah blah. Stock goes up, good move, and I think they did it as an FU. I think it was less strategic and more of an FU to basically Chinese market structure, and essentially just saying, hey, you know what, two can play at this game, and because
meaning I'll comply with your boundaries and caps, and in the process I'll become more valuable and richer.
Yes, because the reason that American companies, the U.S. companies, like Amazon and Facebook, I don't see the same thing happening, is because, and I doubt you'll ever see it happen in Google, because companies like that, and especially Amazon and especially Google, and companies waited so long to split their stock because they were so terrified about giving up control. And when you look at Google, they even have two classes. Google trades as GOOG and GOOGL. I mean, it still trades as two classes. In the US, companies they're absolutely petrified of giving up control. Founders just don't want to give up control, and they don't split their stock. They don't want a dilution. They don't want it going into the hands of individual investors. And I just think that, given the way we treat these monopolistic entities, whether or not they're monopolies, who knows, but these monopolistic lookalikes, you know what? This is the perfect environment for them, and they don't have to do that. I think in China, the whole game changed when the Chinese government changed the rules out of nowhere a couple of years ago and decided to destroy market structure and market value for these companies. They've spent the last couple of years trying to figure out how do we turn this around? What can we do that will make it look like we're playing in the rules, but yet we're really, doing something completely different? And I think Baba just made that first move, which I think is phenomenal. Because I think, and obviously the market agrees, but I think it's phenomenal too, and for a bunch of different reasons. Primarily in their world, it's phenomenal because they got around the crazy market structure limitations that the Chinese government put on them, and because nobody knew when they were proposing this, nobody knew how. They probably proposed it. They said, sure, go ahead. It's not going to help you. And it helped them. And then the beautiful thing for us here is it just created, the most excited people should be these crazy investment bankers, because of course now they have we need a meeting at Morgan and Goldman need a meeting today with every board of every conglomerate. Of course, because they've been dead to rights for 2 years. Now they have something to talk about. And now we can do some scoping, we can do some modeling, we can see how much it might be worth, which one we can IPO first. How do we IPO all these parts and pieces without giving up control? We'll just sell 20% of each one. Yeah, it's really hard. It's really, really hard to do what Alibaba did. Now, I'm saying this because I've been down this road before, and for a large company, especially the size of Alibaba, to make a move that is, can you think of other companies that have split? Obviously PayPal. I would say the Arbox would be when they did the Baby Bells would be the last thing that was at this scale. That was almost forced. When you think about spinoffs and stuff, there's not that many, when eBay spun off PayPal or something like that, but there's just, it's not an approach that's used very often. So to do it takes a lot of balls. So maybe Jack Ma is that person. That's why he's the world. That's why I believe he should be the world's richest man, even when he's not. That's why I put him as the world's richest man. But at some point, does anybody care? Like, is there some? Do you think any of these world's richest people care that they're the world's richest people? I don't know. No, I care, because if somebody's going to make me listen to the world's richest man and whatever that he's or she is saying, I want to hear what Jack Ma is saying. I don't really want to hear what these other yeehaws are saying. Well, we're all tired of Elon, but I don't know if anybody else is. I don't know if we're tired of anybody else. What's the use of Bezos? He's just about Bezos is all about Bezos. Like, he's not going to do anything interesting. He's not spending money, lifting weights, running rockets. He doesn't care. No, he's not going to say anything interesting, but he's not going to, at the same time, he's not going to say anything. Like, he's not going to say anything, really. Right, but Jack Ma's going to do things. That's the difference. Jack Ma's a true leader, in my opinion, regardless of wealth. I don't know. You can't say too much. As long as he decides he wants to be Chinese, he can't say something. I don't know. I don't think he can say that much. But he can take action. Anyway, I do believe that I actually think there's value, especially for Facebook. Yeah, but Facebook's the most in the weeds. Yeah, but their control is everything to Zuckerberg. Everything. They're not, it's everything. You have to be you have to believe in the organization that it just doesn't work that way.
Yeah.
In
No, the
US.
center of gravity has to be in the organization, not
That's
with
right.
the founder. And as long as the center of gravity is with the founder, you'll run the company. The company will be mismanaged or run less efficiently than it could be in order to preserve the founder's control. Nine times out of 9.
You know, what makes Zuckerberg, and you can argue great, not great, whatever. What makes Zuckerberg great, and you have to say he's great just because of what he's been able to do.
I mean, come on.
But what makes him great is that he has had the ability to take risk and make trades. I mean, when he bought Instagram, it was a
trade of the century.
Trade of the century. Okay, nobody pulls that off. There's no freaking way in the world that anybody else pays $1 billion for a company that trades
10 guys.
For 10 guys in a company, for 10 guys in a company,
100 million a person.
In a company that traded a week before or a month before for 500 million, which was a stupid buy because the company that traded for 2 months before that for 250. Okay,
and
so
there's no way the guy that makes that trade makes money.
Never in a million years.
Hundreds of billions.
1 in a billion. So you can't. Like I look at these trades and I look at these guys, like when Google bought YouTube, you know, you forget, like, these guys, they fire on everything. They buy Motorola, lose 10 billion. They buy this and that company, they lose a few billion, you know, like, you know, whatever it is. And next thing you know, they buy WhatsApp and they lose whatever, 10 billion right away. But then all of a sudden, you know, you get an Instagram.
Right. Well, it's not that you get an Instagram. It's that by buying WhatsApp, Instagram, et cetera, you get the world's ultimate data set, which you then learn to sell to the ultimate ad platform in history. And my point is that ad platform is now.
Okay. So which leads me to something that I've been saying for a gazillion years here at Tasty, which is, and I've been saying this to people all over, every opportunity you have to do a deal, you do it. And I know people are gonna say, well, that's stupid because you're gonna end up with so much crap. And the truth is, you end up with so much crap. I talked about this the other day at our Bad Trader show. You end up with so much crap, but you have to get through that crap because you can't pick and choose. Nobody knows. The success is so random. You have to pick through the crap.
I would argue, I agree, but I would argue that the sentiment to then do deals the other way relies on the same logic, which is freeing those transactions. That's just another deal the other way. Like when you're talking about deals, you're talking about deal entry. You're saying
deal entry, right?
Right. And I'm saying deal exit.
Deal entry and deal exit are exactly the same.
This is the same thing. If there's a chance to exit,
you exit.
Right.
Here, we've always said this about ourselves, Dylan, you know, about Tasty and all the companies we've built. They're never for sale until somebody makes the right bid. Like they're never on the market. But there's liquidity and a level to exit. It's always under consideration. It's always just a measure of where you think the value is and what somebody's willing to pay. You know, you're a trader, and so you know, if you think your company's worth $100 and somebody's willing to pay $150 for it, then you kind of have to make the trade. If you think your company's worth $100 and you're bullish and somebody wants to pay $110, you don't have to make the trade. But at $150, you have to make the trade. You know,
but in Mark Zuckerberg's case, he'd done a model with Sheryl Sandberg that showed that the data from WhatsApp and Instagram, or just the data from Instagram, was worth $100 billion in ad sales, which is why it was easy for him to go from 500 million to $1 billion, because he was looking at a different spreadsheet than everybody else. Because he was with Sheryl looking at data that can be turned into ad revenue because of the acquisition,
well,
which then
that's that,
and no one else could value the asset that way.
That's brilliant. But then you look in the same thing, you know, you turn around and look at what happened to Elon Musk and Twitter, and you're like, okay, well, that backfired. I'm just saying.
I know. I get it. But how do you unwind the Twitter deal if you're Elon Musk? If I get you a 30 minutes with Elon to help a brother out?
No, you're never unwinding it. You're never ever unwinding that. I mean, maybe
can you hire a CEO and go back to your rockets? I mean, he's stuck sleeping in San Francisco with that thing.
Yeah,
like it's a nightmare.
I mean, you got $100 billion in a rocket company. You've got, whatever. It doesn't even matter. It's nothing. It's nothing.
Well, it matters is his ego and his time, right? It's just his own. It's his ego and his time.
Yeah, it's his ego. Who cares?
But if he can hire a CEO and head back to LA to the rocket company and leave the Twitter people twittering,
you should apply for the job.
No way.
No, you'd be good. This is perfect for you. Because you would give him a little, you'd give him some lip, and
it's a news organization, so it's a real, you can run like a real news organization.
You can't kill a man born to die. You are the perfect person. He couldn't hurt you because all you
that's for sure. But anyway, the point is, this is all well and good, meaning the Sosinophian philosophy of the day of entry and exit. With the exception of the fact that enough bad entries and enough bad exits, and you don't have it. Like, the most profound thing you've said in the history of truth or skepticism was this.
Oh, God.
Whatever the philosophy may be, by the 45 days, IVR reversion to the mean, positive drift, get in the deals, get out of the deals, be at risk, understand risk, blah, blah. Great. Your very point, which was fuel for your argument that the value or interest of one day to expiration options, crypto, meme stocks, whatever, is because the amount of capital people have to be at risk is limited. And so the number of deals that they can enter or exit is limited by their whatever the resources they're managing are, which then makes them seek lower probability, higher volatility assets. And my point is, it's kind of if you have unlimited resources, sure, I'll go in and out of every deal. And Tom Sosinoph says I should go into every deal. But the reason I have to be selective is because I don't have enough money to do every deal. And I'm interested in how you reconcile the logic of the philosophy with reality.
Well, that's why people. I mean, that's why some people.
Well, no, but let me ask you. I don't want to be. I'm not trying to stump the band here.
No, I understand. But that's why some people don't do it.
You have two ways to do it, right? I can reduce position size and have maintain some number of deals with a smaller position across the board. Or I can maintain some position size and try to be selective. And of those two, I'm assuming you're going to say, stop trying to be selective and just drop your position size and get as many as you can.
Yeah.
Right? I mean, that's the only possible answer.
It is the only answer. It's the straight, it's straight tasty. It's law of large numbers.
Just drop your position size and
but capital is always the constraint. It's the constraint for trading. It's the constraint for any business. Capital is always the constraint. That's why people that don't believe, this is another part of the argument that I make all the time with respect to business, which is you take money whenever it's offered to you because money is way more valuable. Like, having the cash to do whatever it is that you need to do is the single most important thing. It provides you liquidity. It provides liquidity for opportunity. And people miss that. Like, people are like, I don't want to dilute. I don't want to raise money because I don't want to dilute my share. But what you need to have in order to grow your share, grow your business, is capital for opportunity. And most people try to raise money when they need to raise money, which is a huge mistake because you pay too much for it. What you need to do is raise money when you don't need to raise money, because then you have the capital for opportunity and it's always there. That's a huge distinction.
I totally agree with you. But here's the thing, because this is an issue forever, right? And so there's one idea that is, when you're riding the bike, when the bike is in motion, then it has value because you're going to see new things and meet new things and see new things and have new things. And having money is what moves the bike, because I can pay payroll and rent and do things and whatever project. And people will stop the bike, in my metaphor, because they're like, I don't want someone else to have an ownership in this bike. And that, I think, is where 95% of deals break down to the detriment of the people that are denying dilution, because dilution, it shouldn't be seen as dilution. If you see it as dilution, don't do it. What you're doing is you're getting a smaller percentage of a more valuable asset, even if that value is only the fact that the asset now will continue to have more data from experimentation and engagement, which creates more probability of new deals in the future.
100%. You're 100% spot on.
So but I know that I am. And so then what is it's almost like an educational issue. I almost feel like you should be able to go into like the middle schools and be like, when you're making deals, you have to understand what value is, and you have to understand that existence is a value proposition. The ability to participate is intrinsically valuable.
Yeah.
And you're better to have 2% of a big company than 100% of no company or a small company.
I cannot tell you the number of times that I've met with young entrepreneurs, rising stars, people with great ideas, and everybody, almost to a person, says, I don't want to dilute. And I'm like, dude, or whoever you are, don't think that way. That's not the right way to think. Take the money.
The issue is the primitive monkey brain of humans. It's not their fault. It's not anybody's fault. Because the brain functions from a scarcity mindset. And it goes to the same thing of the control of Mark Zuckerberg. Mark Zuckerberg's control of Facebook is just the ultimate extension of that sentiment.
You can get, the challenge is that when you get to a certain point, like Mark Zuckerberg is, or Jeff Bezos, or Elon Musk, or whatever it is very difficult. At that point, you have FU money, and you don't care. Like, you're past the point of caring. The shareholders do not care, because he doesn't care. So, there's nothing you can do. That's what surprised me about Jack Ma's move, was that he made the move, even though he didn't need to make the move personally. Usually the people that make that move have a personal economic incentive. Of course, because they own a tiny little percentage, like 0.5% or 1/4%, or they're a normal CEO with, a few tens of millions of dollars worth of the company, but not, they don't own
not 4 billion or 8 billion or 14
billion. Or like
billion.
Elon, 125 billion, 180 billion. Right. It's a different, so that is the whole issue. And same thing with Zuckerberg, and same thing with, was always the same thing with Bill Gates and all the guys from Microsoft. It was always the same thing at Apple. It's just, it's different. One of the reasons that Apple flourished under Tim Cook was because his ownership share was lower.
Right, so the center of gravity was not with the founder, it was with the company. But you can't move the center of gravity until the founder leaves.
Exactly, it's hard. Yeah.
I mean, they were trying to move the center of gravity at Bloomberg for years away from Mike. Mike went to the mayor's office. He was the mayor of New York. They're like, this is when the center of gravity moves. No.
Yeah. Yeah. I mean, that is the challenge.
Which I don't think is bad for that company. I think he's great for that. I'm just saying that you can't.
I know, but what I'm saying is that's the challenge that everybody faces. That's the challenge that all these, massive founder started company. I mean, and listen, it just is what it is. But
yeah, it's natural. The reemergence of Jack Ma and the celebration of his reemergence, not just by you and me, but by the global financial markets. Do you, as a effort to re-enter the dance floor 2 years later by China, right, after an embarrassing stumble and exit, and to your point earlier, they need a re-entry. So their re-entry is a glorious return of Jack Ma with wealth creation for everybody, and Jack is back. Do you believe that is good strategically for China as they seek to repair or reestablish capital flows and all the rest of that? With Western markets.
Yeah, I think China made one of the probably one of the most horrible mistakes, with respect to what they did to their, kind of own what they did to their own capital markets. And
I remember a couple of summers ago, you were quite dismayed.
I've been on their case for years. In fact, last weekend I wrote that there's, like we all sit here in America worrying about China, and I think I used the exact line of, I don't think China's capable of tying their own shoes. That's how incompetent they are, and everybody thinks they're this incredibly, precise powerhouse.
Strategic superpower,
precise everything, brilliant everything. I think they're incompetent and nothing to be worried about because they basically cannot tie their own shoes. Now, that said, I think there's two things putting, China, I think this last move by Jack Ma was very smart and did help. At least from an investor perspective, it gives people a lot of comfort. I think there's no question about that. I also think and I don't want to beat a dead horse, but I think that the whole TikTok debacle here is actually very good for China. Because
people love TikTok and they're like, what are you doing?
That's right. And the American politicians are just, you can't go in front of a bunch of nursing home politicians and basically try to talk about a technology platform without it just being like just a labor of just mass.
Did you see that soundbite? I'm sorry. Did you see that one soundbite when he with the interview with the CEO of TikTok by any chance? Did you see any of it?
Yeah, I did. Yeah.
You see the one when he's like, does this attach to the Wi-Fi or whatever the heck he was like? It was like.
Yeah, I mean, he wanted to just kill himself. I understand. Like he's like.
But he was so humble. He was like, I think I understand your question.
I know.
Yes, we use the Wi-Fi.
Yes, he was being very polite, but I mean, that's what he's dealing with. Like he's sitting here trying to defend the business, but he's trying to say, do you have to push a button to get this thing going? Like that's where he's at. And it's and you're sitting there watching this, going, oh my God, I just want to. I'm sick by watching this. It makes it.
But you think it's China positive, to your point?
Like, oh my God! Of course it is. It's so embarrassing to watch that as an American consumer. 150 million Americans are on TikTok, and then you watch that as a consumer, and you're like, oh my God, this is the most embarrassing thing I've ever seen. Like, and he's trying to be polite. Can you imagine if it was Elon? Can you imagine if it was, like, what if it was me? I couldn't, there's no way you could be polite. And anyway, I do think that this whole thing really bodes well for China. The whole American, I think we're making fools of ourselves in that regard.
With the combination of the TikTok tomfoolery and the Jack Ma splitter, reemergence, does it give you enough confidence to change? Like, would you originate a China position today? Would you buy out the FXI? Would you sell? Like, are you more inclined to participate? Because I know you've been over there a bunch in the past, much to your chagrin.
Yeah. No, I've been long, Bob. I covered yesterday on the rally. I was been short puts in there for a month, and it wasn't really a great trade. It worked out great after yesterday. But I've been long China. I'm still long China. I'm long FXI. I'm long.
But would you like to get more long today than you would yesterday?
Not today, but I will get more long.
In other words, the price levels today are a little too bubbly, frothy from all the.
We actually sold some puts this morning in FXI.
Okay.
So I can't say it's. So
you're in there.
Yeah, I'm in.
You're in there.
Yeah, I'm in for sure. But I think this is a tone change. Absolutely.
Speaking of nursing home politicians, I have a different thesis, which is semi-relevant, which I think you'll take heart with, which is I don't think that either the current president or the front runner for the Republican Party, the lead, I don't think either of them will be deemed viable candidate. I think that there'll be a new president of a new generation next year.
100%.
Huh?
100%.
Yeah.
I don't think either one. If you're talking,
this is the year they both go away, in my opinion.
I do not believe that Trump will be the candidate. I do not believe DeSantis will be the candidate. I do not believe that Biden will be the candidate.
I think you wipe the yard in 23 and see who shows
100%.
up in January 24.
100%. I mean,
which again, that's neither here nor there. I'm just saying I think that's good news from our perspective.
I think it's good news too. I think that I think at this point that Biden is trying to protect, protect the party, but I think he knows. I think Trump, his ego is, too great that he would never. But I kind of think in a strange way that he doesn't really want to do it. I think he committed.
Yeah, he's taking possession of his carnival and pro wrestling tournament, but he doesn't necessarily.
Yeah, I think he's, I think he's the least qualified candidate to do anything other than disappear into the sunset.
Run a carnival. He's good at running a carnival.
Yeah. I mean, DeSantis, I don't think he's electable. I think they're going to find somebody else. I think there's going to be a surprise Republican, somebody closer to the center, somebody that we're not even imagining who it is right now.
I think it's going to be a clean sweep. I think we're going to get the full flush. I think you're going to
have the same thing on the Democratic side. I think you're going to have the same thing. I think it's not going to be Kamala Harris. It's going to be somebody else. It's going to be somebody that you don't expect right now. And you're going to have two new candidates. They're both going to be front runners. The American people have had it. They're totally sick and tired of the pity tour. They're totally sick and tired of all the bullshit. We've moved past this. We're too freaking smart for 80-year-old politicians. We're too freaking smart for what we have right now. We have to move past this back into, real debate, into real policy issues, and with real people that are actually smart. We got to move on.
And obviously we agree to that, but I think essentially, though, I'm more optimistic for that than I've been.
How could you not be? How could you not be? These candidates are not electable.
Self-evidently, self-annihilate. I mean, come on.
We're better than that as a country. We're better than this. We better be better than this. So which brings us to the topic du jour, which really is the topic du jour, which is you saw the open letter from Elon Musk and a bunch of other people requesting a cease and desist for any further advancement of AI beyond GPT-4. Did you see that letter? I mean, that's such a ridiculous.
Did you see the letter?
I did not.
Okay, but can I just tell you a little story? Because I've been spending some time in Los Angeles these past few days. And I was working off of Sunset Boulevard in West Hollywood, down the street from where the Comedy Store is. So right in the heart of the beast, if you will. And on the street, I ran into a large Coleman cooler that had been attached to 4 knobby tires and mounted with a robot and a flag and a face. And it was driving around by itself in West Hollywood, delivering food. So you could order food, and then this little smiling, rolling robot cooler will come to you and bring you a nice avocado sandwich.
I saw it. They're all over Santa Monica. Sure.
Okay, so that exists. That's a real thing, okay? AI exists. It's real, and it seems rather impressive. AI with those robots with an adverse point of view and, weapons, how can you not take them seriously? Like, you're ready to throw this whole Elon Musk thing straight in the Chicago River. I mean, they've made the movie before. Like, we know that this movie can have a bad ending. I think that's what they're saying. I agree with positive drift. I'm optimistic, but I don't know what I don't know. And if these people are telling me that the AI can take over the robots, why is that not of concern for you?
It's just not of concern for me. I mean, I don't know why,
But so you don't think the AI will take over the robots at any time?
Maybe they do, but I don't know why I would be concerned about that.
Well, your Tesla is a robot, so you're driving in your car, the AI takes over, and it makes all the cars turn left right now. Every Tesla goes left.
Oh, so you're worried about it for some criminal, nefarious?
I'm worried about AI intervening in a negative way for human life, whether it's with the modern automotive, modern aviation, or.
So somebody disrupts the world. We're going to disrupt.
Somebody. My point is not somebody. Because no one can figure it out. Plenty of people have been motivated forever. They can't do it. Elon is saying AI might be able to figure out how to do stuff like that.
Okay, I'll take my chances. What are we supposed to do? Crawl in a hole?
Well,
I mean,
no,
you know.
we stopped. Listen, when they started cloning sheep with genetics, we were like, let's not clone a person. Nobody clone a person. Just because you can clone a person doesn't mean you should try. And we made a global agreement. Who knows what the compliance is? God help us. But we believe we've made a global agreement. We're not going to clone people. Okay? And Elon and friends are saying, let's make a global agreement. AI doesn't move beyond GPT-4 until there's some better sense of,
I guess I'm not smart enough.
Risk mitigation.
Yeah, I guess I'm not smart enough. I don't know. It doesn't scare me, but I guess I'm just not. I don't think I'm the.
You're the guy?
I don't think so. I don't think I'm the guy.
But are you the guy to say Elon is wrong? You were saying, don't worry about it. Don't worry about it.
I'm not saying he's wrong. I just don't. I don't worry about that stuff. You know, I'm not a sky is falling type person. I don't worry about it.
I know that. All right.
Yeah.
Okay. All right.
Yeah.
So let it be.
Yeah. Let it be.
You're in the classic. The world only ends once, and it's probably not now.
Yeah.
And so let it be.
Yeah. I mean,
you ever use one of those robots?
I mean, you're in Los Angeles now.
Yeah.
Right? I mean, you probably have a greater chance that Los Angeles is going to fall into the ocean in an earthquake than there is that AI is going to, you know, do something.
Take over the Teslas?
Yeah. I really believe that. Like, I'm not. I mean,
the amount of rain out here, I think the risk. I feel.
I understand. I'm just saying,
I think
but
it's more of a mudslide risk than an earthquake risk.
I know, but I find it really funny that everybody that, like, you know, all these people living in the West Coast, you know, that worrying about AI, but they don't worry about the earthquake that's right underneath them,
or the fires. Have you ever been out here when it's burning? Oh my God!
No, never. But my point is, that's my whole point. You know, everybody's worrying about AI. Really? You know?
The wind will go 40 miles an hour at 105 degrees air temperature.
Okay.
So it's not just a fire, it's like a blowtorch.
Well, you don't hear us talking about that. That's my point. I don't care. Like, that's why like, I don't, like, you know, the whole conversation about stuff that drives me crazy. I mean, I'm going to sit around worry about every single thing.
That's what the news business is made of. A list of all the things you're supposed to worry about today. The weather.
I know. I live in Chicago. I have to read the news all the time. And so when I walk out my house, I'm going to get shot.
It's like,
yeah, I don't. You can't live your life like that. I don't live my life like that.
I agree. I haven't watched the news in years.
There you go.
It's bad for your health.
There you go.
All right, I'm going to make friends with the robots then. We'll see what happens.
I am Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. And what did you call it before? A trust what? Trust what? No, with the break.
Trust busting.
Trust busting,
yeah.
I'm going to use that term.
Teddy Roosevelt, here, watch it. This is the roaring 20s. The trust busting was in the late 20s. This is it's 100 years later.
Yeah.
Here we go.
Yeah. So I'm going to be focused now on trust busting because I do think that the most interesting part of the discussion today is this going to be a new, you know, is this going to be a new, is this going to be the flavor
gold
of the month?
Rush of spinoffs? Okay,
yeah. As a trader, I would love to trade Facebook and Instagram
and WhatsApp
and as a trader, I'd love to trade Google and YouTube. You know, and I could do this.
And Amazon Video and Amazon Retail at Christmas and Amazon Web Services.
Yeah. You're damn straight.
And so that's why Alibaba's up 20%. And that's why the Goldman meeting will go well when they go to the board. Because listen, does everybody want a lot more money? And they were like, yes. And you want to keep control? Yes. Anyway, I think everybody would like that. It's cyclical. It's cyclical, and I think I'm arguing the celebration of the Jack Ma move is an incentive to sort of ease into a potential era of spinning, as long as it makes money. I know you were saying it's the new SPAC, which I know you backpedaled that, but the point is it's a new market structure to make money.
It's a new market structure. It's better than SPAC. Yeah.
The SPAC is an indication of a market structure that has many problems and has a lot of negative connotations. spinning off is just
Yeah, I agree.
The worst case with the spinoff is boring.
I changed it. It's the new split. It's the new split.
The spin is the new split.
Yeah. Again, I'm Tom Sosinoph. He's Dylan Radigan. We'll see you next Wednesday, every Wednesday, 1 p.m. Central Time. Thank you so much, Dylan.
Always a pleasure. I'll see you soon.
Goodbye.
Bye-bye.